Recessions are now illegal. Prepare accordingly. And just so we're clear, this is for educational purposes only. It is not financial advice. All investing carries the risk of loss. Let's get into it. The United States government can no longer afford a recession, period. And today, I'm going to show you the exact math that proves they will print trillions to stop one. You might think a market crash means prices are going to drop. But the truth is, a contraction absolutely destroys the government's tax revenue. And that triggers an immediate sovereign debt crisis. So you're going to want to stick around until the very end, because I'm going to reveal the exact physical assets that politicians are quietly hoarding right now to survive the inflation they know is coming. All right, so first, we have to understand the fundamental reality of our fiscal landscape, and that is a massive $39 trillion sovereign debt trap. Understanding the mechanics of this crisis, well, it's the only way to see what's coming next. Let's just break this down. It's actually pretty simple. Imagine a guy who owes $1 million in credit card debt. He's already just scraping by, making those interest payments. Now, this guy absolutely cannot afford to take a pay cut, right? If his salary drops even a little, he can't make the minimums, he defaults, game over. Well, the U.S. government is that guy. And tax collections, that's the paycheck. But here's where the scale of the problem just becomes insane. We've blown past $39 trillion in gross national debt. You have to remember, it took this country over 200 years to rack up its first trillion in debt. Now, we add that amount in just a few months. This is a structural problem, not some one-off event. And look at the trajectory here. According to the CBO's own numbers, this is a one-way street. Debt held by the public is on track to hit 120% of GDP by 2036, and a completely staggering 175% by 2056. This is the literal, mathematical definition of an unsustainable path. So, here's the crucial point. The government's paycheck isn't some stable salary. No, it is incredibly leveraged to the health of the economy, to corporate profits, and, most importantly, to the stock market. Therefore, a recession isn't just a simple pay cut for Uncle Sam. It is a catastrophic event for federal revenue. And this data right here, this shows you just how insane that leverage is. During the Great Recession, a relatively small dip in GDP caused a massive, massive collapse in tax receipts. And just look at capital gains revenue, down 73%. This is what we call the recession arbitrage. A minor economic downturn blows a multi-trillion-dollar hole in the budget almost overnight. So what happens when your revenue completely collapses, but your spending on things like Social Security, Medicare, and interest on the debt is mandatory? It's non-negotiable. The deficit doesn't just grow, it explodes. And when you're faced with a choice between a debt spiral depression and printing money, the government will choose inflation every single time. Okay, so this unavoidable conclusion, it creates a huge informational asymmetry in the market. There's a massive gap between what the largest players know and what the public doesn't. And to understand their strategy, you've got to understand where they operate. We're talking about dark pools. These are private trading venues. They exist for one reason. So massive institutions, think pension funds, can move billions of dollars without tipping their hand to the high-frequency traders on public exchanges, which would immediately move prices against them. Now, what's so interesting here is the difference in perspective. The public market, retail, they see a recession as a normal cycle, maybe even a chance to buy the dip. But the institutional players in these dark pools, they understand the truth. A real recession would trigger a sovereign debt crisis. For them, it is an extinction-level event for the bond market. So if you're one of these elite players, and you know this, what's the logical move? You execute a stealth pivot. These allocators know with absolute certainty that politicians will always choose inflation over depression. So they're using dark pools to front-run the money printer by quietly hoarding assets that cannot be devalued, assets a central bank can't just print into existence. So, what does this institutional pivot and this guaranteed money printing mean for the rest of the economy? Well, it means we are entering what you can call a stagflation super cycle. And this is the vicious feedback loop. You see how this works? A recession threatens tax revenue, so the government prints money to stop it. That printing devalues the dollar, which makes essential physical resources, things like energy, copper, way more expensive. That inflation stays high, which suppresses real growth, which then forces the government to print even more money just to keep nominal GDP afloat. It's a trap.
So here's the brutal takeaway. The cost of living explodes. And look, this isn't an accident. It is a feature of the system. This cycle becomes a hidden tax on the middle class, just destroying the value of their savings and their wages to implicitly pay down the national debt. Meanwhile, those who own the hard assets, they see their nominal wealth absolutely skyrocket.
This brings us to the ultimate payoff. We've laid out the problem. We've established the inevitable inflationary solution. So now, let's look at what the architects of this very system are doing with their own money. Let's just ask the question directly. If you are a politician, and you know this is the only path forward, where do you put your personal wealth to protect yourself? The first asset class is physical land. It's tangible, it's scarce, and it's absolutely essential. And the data backs us up completely. We have seen a massive 85% increase in foreign ownership of U.S. farmland since 2010. You think it's a coincidence that Congress is now suddenly pushing legislation like the Farmland Security Act to monitor and protect this critical asset? No, they are securing an asset they are actively accumulating. The second reveal, real estate. But I want you to forget the commercial office crash that you see on the news. This is about the strategic transfer of land. Federal subcommittees are quietly ordering the sale of so-called underutilized government properties, prime locations that are being repurposed for the new economy of data centers and logistics hubs. And the third piece of this puzzle is hard commodity infrastructure. We're talking about the power grids, the water systems, the data networks, the physical backbone of society. Because in an inflationary world that's driven by resource scarcity, owning the infrastructure is the ultimate hedge. And if you want to see this pivot in real time, just look at the data. Congressional trading disclosures from 2025 show this massive rotation. Lawmakers are net sellers of stocks, especially high-flying tech, while at the same time pouring millions into bonds and municipal securities, the very instruments that fund local infrastructure projects. They are literally funding the build-out of hard assets and getting paid the yield for it. Which leaves us with one final critical question. In a financial system where the government is forced to destroy the currency just to save itself, what is the actual price of a hard asset? Drop your answer to that question in the comments below, and if you found this analysis valuable, hit the like button and subscribe for more.